Hey guys, going to talk about Flow Traders quarter two here. Now, I made some predictions in my last video and I was totally wrong on them. So I'm going to go over what went wrong here and where I think I made mistakes. And I'll look at this quarter and see if I think, okay, is this a disaster of a quarter or do I just not know what I'm doing? So there were some good things this quarter and there's some things that I'm very concerned about. And so I'll look at all that stuff this video. So one of the reasons I do these videos is to hold myself accountable to myself. When I speak to the camera and post it online, that creates a level of accountability to myself because other people are watching the videos. And that's part of the reason I'm doing this channel, is to actually become a better investor by looking at what I got wrong and what I got right over time. And in this quarter, I have definitely got something wrong. So I want to admit that, and I want to take a look at what I might have messed up. So in the last video, I said because the VIX was going to probably come in higher in quarter two and the volume traded was also coming in high for that quarter, I thought that the earnings would be, and the net traded income would be similar to quarter one. And what happened was, and that's that's around 125 earnings. And the thing that actually happened was earnings were less than 50% of what that estimate was. They came in at 60 cents. So now it's true that, estimating earnings from quarter to quarter is not that useful an exercise because anything can happen in any quarter. And so I'm not looking at it from that angle. I'm not actually trying to get the quarter earnings right. But the problem for me is that I think the assumptions that I'm using on what actually drives income is not actually correct. So that puts a wrench in my whole idea around this company. And I'm left in a position where I think, oh, I don't really know what's going on here and what's actually driving their earnings and the income. So that was one of the risks I did talk about in the last video, the risk of not really fully understanding the nuts and bolts of the company. And it turns out that my understanding is even less than what I thought it was. So what I'm going to do is I'm going to spend the next 3 months really looking at this and trying to get a better handle on the company. But in the meantime, in this video, I'm going to go over some of the items from quarter two, some of the concerning items, and also there were some good items as well. So I'll look at those both. All right, so if we look at some of the high-level items from quarter one in terms of the volume traded, the volume traded was down 14% over the first quarter. So that is that's a bit concerning. However, the VIX was actually higher. The average VIX was actually higher in the second quarter than the first quarter. So in terms of the volume traded, minus 14%, it was actually minus 19% in Europe, but Flow Traders did increase. It looks like they increased their market share in Europe because the entire area actually reduced by 26% in terms of volume traded. So that makes it seem a little bit more reasonable that the entire area came down 26%. So it's not surprising that that Flow Traders would have a reduction in the volume traded. But the problem here is that to go along with that 14% volume traded, the actual net trading income has come down by 44% overall. And if we dig into that a bit, again, the problem is coming from Europe. That's where they make the majority of their income, and the trading income there fell by 54%. So if we zero in on the problem, it looks like it's coming from the European part of their trading operation. Now, I'm unsure as to what's going on here. Like, is that type of drop in trading income, is that consistent with the entire market? Is that just what's happened here because there have been no sort of dislocation events here and everybody's just, the spreads are just getting tighter and everybody's making less money? Or is it specific to Flow Traders that their margins per trade are coming down and it's a systemic problem within the company? Some other quick notes here are the EBITDA was down by 51%, and net profit was down by 53% to 26 million for 60 cents a share. Now, these are still good margins. They're still making a high return on equity overall, even in this quarter that was down from where we'd expect. The return on equity is still quite high here. I think it's 5% or so for the quarter, but I'll put that image up on the screen. Okay, so the big issue for me here is about the margins. Now, the margins looked quite a bit lower this quarter than they have in the past. If we look at the net trading income versus the average VIX, this is one of the worst quarters that we have on record. So it's quite concerning from that perspective, and makes me concerned that the margins on the trades are reducing over time. Now, I'm not going to look at this one quarter and make a decision because, as you can see, the results kind of bounce around all over the place. So I'll be keeping a close eye on this going forward, and especially the European results. Now, one of the things that made me feel a little bit better was that there was at least one analyst that didn't quite understand what was going on either. If you're going to listen to the earnings call, it's the very last question. So that made me feel a bit better that this guy asked. He said, basically, what's going on here? The VIX is up, the volume's way up. It's up, 66% this half versus last year. And so basically, where are the earnings? What's going on? And the company's answer was a bit vague, but basically they said that it's not really all about the VIX. The VIX is a North American statistic. It's not related to the European markets. They didn't say that, but basically they said the VIX isn't always an indicator of what's going on for them. They said one of the main things is these dislocation events. So kind of market events that jar the market up or down quickly, right? Like the Ukraine invasion was one of those where everything got thrown off balance in very quickly. Whereas in Q2 2022, there weren't a lot of these events, right? They talk about major events and minor dislocation events, and there weren't even that many minor dislocation events. It was just kind of a consistently large move day on a lot of the indexes, 2-3% up, down. But there wasn't there weren't that many jarring events that happened here. So that's one thing. So from the company's perspective, they're saying this is actually fine. This was a normal quarter. Nothing to see here. Everything's kind of fine. But at least one analyst thought maybe he didn't really understand. And some of the other questions were kind of geared towards the same questions, like, well, was the problem here in cryptos or was it over there? So it makes me think that I'm not the only one who doesn't understand what's going on. In terms of margins, I did put together a spreadsheet and sort of graphed out the margins over the last 5 years. And it looks to me like European margins actually overall are fairly stable. So we'll see if those bounce back in the next quarter or two. And this is just a normal piece of the cycle. The North American margins are very low. You kind of expect that. It's the biggest market, and it's the most competitive. You have the most the biggest, smartest competition with the deepest pockets. So you would expect that the margins are lower there. And then in Asia Pacific, the margins are high, but they've been coming down over time. But the company's presence in Asia Pacific is not that big, so I'm not really concerned about this as of yet. Now, my last concern here is if we're listening to the company and they're saying, okay, it's these dislocation events that actually drive the earnings. If I look at Q1 2022 versus Q1 2021, there was actually, maybe I'm not remembering it correctly, but there was a lot more, or there was at least one severe dislocation in this year versus last year. And so I think the quarter one was actually more calm last year in terms of the VIX says that there were no real big spikes in the VIX at that point. And also volume traded in quarter two this year, or sorry, the first half of this year was up by 66% over last year. But if we look at the results from quarter one this year and last year, the results were basically flat in terms of trading income. So you had higher volumes and you had more dislocation events this year in 22, and yet the earnings did not rise. So that's not consistent with what the company is explaining in their earnings call. And so that indicates to me that, you know, something else is going on. Maybe they're just not explaining it properly, but maybe there's other things going on under the hood, or the margins over time are actually declining and they actually need this growth that they're producing just to offset the margin decline that's happening over time. Okay, well, now with all that out of the way, all the negative stuff out of the way, there are some positives here, so I'll go over those quickly. The growth plans look really good to me. They are talking about expanding their footprint in the US to grow their lead market maker program there. They also are planning on opening a Shanghai office, which actually I think that's the bigger growth news here. And in the earnings call, they said there's basically no lead time for losing money on this. They expect to be profitable as soon as it opens, as soon as they get they're approved to open it by the authorities there. So that's really good news, and it actually shows that there's not a lot of capital required to grow this operation. So in terms of return on capital, return on equity perspective, that shows shows very positively for future growth. Other things that are going on for growth is they're taking, like I explained in the last video, they're reducing their dividend payout to about 50%, and it looks like they're using that excess cash to invest in a VC fund. Now, I was looking into some of the investments they made, and the first round I didn't love so much. It was a lot of crypto and DeFi investments, and that was presumably to help expand their presence in those markets. They're looking to invest in things that have synergies with what they're actually doing, not just sort of independent investments. So that would make sense on that front if they're investing in that. But in this newest round, there's a lot. There's a lot of investments that I thought were fairly interesting, including the one in the MEMX, which is the fastest growing exchange in the US. And it was created by basically the big gorillas in the financial services industry there. So you would expect that with that kind of backing, it has a fairly good chance of being successful. And just on the capital return front, they did announce a 70-cent dividend, and so that equates to about 3.3% for half a year. And they also announced a 25 million euro buyback, so that would equate to about 2.5%, 2.3, 2.5% capital return as well. So if you put those together, you're up to 5.6% capital return. If you get another dividend for the final dividend that's equivalent to this, then you're up to like another 70 cents. Then you're up to almost 9% in terms of dividends and buybacks. So one of the big positives of this company is it creates a lot of cash flow, and they don't need a lot of cash to grow. So they can return cash as well as grow at the same time. So that's definitely a positive. Even if this growth stuff just offsets the margin decline over time, you're still making money on the dividends and the buybacks. So that's that puts a bit of a floor under the stock as far as I can tell. I do like how they started the buyback with the stock down. That's the opposite from a lot of companies in the market. They buy when the stock and the results are up, and then they cut the dividend when the stock falls. So they're actually doing this the right way, and I like these moves by management. So in summary here, I'm going to keep researching this for the next 3 months to really try and get a better handle on the company. You know, I made a mistake by investing before I fully understood what I was investing in. So I need to own that and then correct the mistake. I do like some things that I see here. They definitely have good growth plans. I think they're growing very fast, and they're growing in the right way. I think by expanding to China and Shanghai, because I think that's going to be a future financial center long term. They still have very good return on equity. The price earnings ratio is low. They're returning capital to shareholders. So there's a lot of stuff to really like here. So I really need to just dig into that, the margins, and understand why the trading income is not higher at this point. They're still the market leader in Europe, and they're growing in the other markets, so that's great. Now I'll keep an eye on this company, and I will definitely post if I learn anything that makes that I feel like I need to share, that I think might help other people. But in the meantime, thanks very much for watching, and have a great day.